notable charts.
I have 5 different Dow portfolios that I've just saved and keep receiving. Need to get through and clear those up. That happens to me all the time. Hello, everyone, and welcome to the Nasdaq Dorsey Wright podcast for the week ending on December 8th. We're recording this, the time of this recording, it is Thursday morning, so a little bit earlier than typical that we're recording it, just a little bit earlier in the day, I guess. We typically record on Thursdays, but we wanted to make sure that we could both be in here sitting across from each other, David. So good to be back across the table from you.
Yeah, I mean, it's at this point often a rarity with all of us being out of the office. Like, I mean, not even so much for working from home, but we all just kind of are traveling right now. I mean, it's the holidays. Everybody's been seeing folks, so people are in and out. So having a face-to-face podcast in the month of December in general is a rarity sometimes.
Yeah, absolutely. I mean, you talking about travel. So I was just traveling earlier this week and I was in the airport down in Atlanta. And I'll be there again this afternoon, actually. But I was in the airport down in Atlanta. That was the most crowded I'd seen the airport in a while. I mean, you're talking just lines on lines everywhere. It was I guess if we haven't been back yet, we're officially kind of back with everybody holiday travel. I know people, we had some coworkers that were traveling around the Thanksgiving time frame, and the traffic lines going in and out of the DC area was talking to some. I mean, that's pretty crazy. So luckily we don't have to deal with too much of that in Richmond, or certainly for you down in the Roanoke area.
Yeah, not too much in the deep boonies of Southwest Virginia. So, unless I mean, it can be an interesting time around the holidays. But nonetheless, we are currently looking sort of in an interesting lay of the market right now as we move into December. In many cases, looking at indices and other things that are in overbought territory, and we're kind of waiting with bated breath for some type of exhale in a way. But one of the indices that we've seen push to at least near its all-time high, sort of under the radar, if you will, because it's kind of not performed as well as other U.S. equity indexes, has been the Dow. It actually is the closest to its all-time high.
Well, if you look at it on a total return basis,
yeah,
it's already hit a new all-time high, which is, I think, an interesting bit. But obviously, the big round numbers that most people care about are going to be looking on that price return basis. And so the Dow, we had a piece in this from the report last Friday. The Dow hit its all-time high last out of the major S&P, Nasdaq 100, Dow. It hit its all-time high, $36,799.65 on January 4th, one day after the S&P. So not too long, but technically did hit it last. And it, as you said, it's the closest to reaching that new all-time high. It's only sitting 3 boxes away from that chart high right now. It's charts kind of, as you said, getting into pretty extended territory. We got up to that 36,200 level last week and just kind of bouncing around, still 96% overbought. We didn't overbought reading on the Dow north of 110% with movement last week, which is the most overbought we've seen the Dow since January of 2018.
Yeah, it's surprising to think it's been 5 years, especially with 2020 being in.
You know, I didn't even think about that. That's shocking to think that is almost 6 years ago. Where that's, yeah. So nonetheless, the Dow's in pretty extended territory, as most of the other major indices are. But we started looking at, I mean, we haven't talked about the Dow all that much this year, right? It's up 8% on a year-to-date basis, and it's closest thing to all-time highs. It's not up 40% like the Nasdaq. Right. It's not up 20% like the S&P. But when you're looking at some of the underlying charts of some of these stocks, I mean, we were just going through trying to pick out what stocks we might want to talk about that are in the Dow. And I mean, I was saying I got too many tabs pulled up now that I can't remember which ones.
Which ones exactly we were going to talk about in the order, but we've narrowed it down a little bit here.
Yeah.
And the main one that both of us sort of agreed upon that is probably the most intriguing, maybe I wouldn't call it most actionable, but it's the most intriguing chart to us. Is going to be Microsoft, MSFT. I mean, it's a 5 for 5er right now. With recent action, unlike many things, it's not stayed near the top of its trading band. It's actually pulled back to 364 on its chart with some recent action here in December, and sits at about 60% overbought, which is really kind of that borderline, what we call actionable territory versus maybe hitting and waiting, or sitting and waiting for further pullback, if you will. But it's also pulled back to a prior level of resistance. So really that's pretty healthy chart action all in all. And at this point, it's kind of started to stay at that support level and rebound at least a little bit today with the price action. Well,
Yeah, I mean, you pulled back just 60% over. Yeah. I mean, Microsoft is there's 5 stocks in the Dow that have 5 technical attribute rating. Out of the 30 stocks, right? Which you might expect given something that's only up 8%, right? But you look at some of these other, I mean, Microsoft is still on a buy signal. You have 73% of the stocks in the Dow on a buy signal. It's in a positive trend. You got 80% of the stocks in the Dow on a positive trend. That tech attribute's not quite there yet, and we haven't seen some of the stuff translate over into that kind of market relative strength. We have not many of the names, less than half the names are on a buy signal against the market. Obviously, Microsoft is one that is on a buy signal against the market, and it's been one of the bellwether stocks throughout the year and has continued to kind of do so. Another bellwether, David, I know that maybe not as high flying and certainly not in the news with all the AI stuff at Microsoft, but at least a very consistent looking chart is Visa, right? I mean, we've seen finance kind of bounce back a little bit recently. People have been focused on the banks, but some of the more kind of credit cards like Visa here, you're looking at 5 consecutive buy signals.
Right. And I mean, as far as looking at sort of the prototypical point and figure chart that we hope to see, sort of that stair stepping, giving consecutive buy signals,
consistently higher lows.
Yeah, the consistently higher lows. I mean, it's hard to beat the way Visa's chart looks right now. I mean, and has maintained that buy signal for now more than 12 months. So, at this point, rallying or at least sitting not far from its recent rally high here at 256. I mean, hasn't quite shown that it's pulled back yet, but I mean, it's just been a consistent chart that, I mean, even if it does pull back at this point, you're looking at just above the middle of the trading band. Still would call that actionable. So
and you got solid support, right? You got solid support at that 228 level. I mean, it is a little bit lower, certainly quite a bit lower. Looking at $4 per box size chart there, so not that many boxes, but several dollars, I guess you could say. But 228, I mean, that would be a triple bottom formation if it did reach down that level, in middle of trading band, as you said, around that 240 point. Slightly extended, not nearly as extended as a lot of other names that we've seen run up recently. I mean, we were talking about some of the stocks in there, both Boeing and Salesforce, excuse me, are both up over 20% over the past month, right? You got Home Depot, we just talked about, it's up over 10%. It just moved back into a positive trend, right? So just many of these areas are kind of getting in a little bit extended territory, like the broader index itself. But the Visa picture there, you see a little bit of a pullback on some of these stocks. It wouldn't be too bad. Could be an interesting area to look forward.
That it would. And Visa, I mean, at this point, as far as the finance story go, we've actually seen sort of financials start to perk up on the asset class group scores page. And I mean, if you were looking to participate in that, picking a high attribute name like Visa is something that we would direct people towards. Looking at those high attribute names within improving areas, that could be part of the conversation.
At least a technically sound name. Certainly, if anyone wants advice, they're going to have to call in there and get it from us from there.
Specifically.
Right. But in looking at some other areas, it's stuff that we talked about a lot. I know one of Will's favorite stocks is Walmart. Right. He's been hampering on Walmart throughout the year, and for good reason. I mean, it's been another name that's been pretty consistent. Not quite as high of an attribute rating. It's one of those names that's down to a 4 out of 5 technical attribute rating. We've seen a solid pullback there over the course of the past several weeks. Walmart reached a chart high up at the 168 level back in mid-November, pulled back, now is sitting, testing its bullish support line down at that 154, testing that positive trend line. If we get a reversal back up at 160, you'll be on a buy signal in a column of X's in a positive trend and smack dab in the middle of its trading band, right? I mean, that could be another pretty interesting area to look toward. Slightly oversold, actually, with movement now. If we get that bounce, if that trend line holds at least.
Right. Yeah, and I mean at this point it would take a move below 150 to take out that trend line. So just the near term prices to keep in mind are at least fairly round, 150 or 160. If you see one of those two, there's potentially some type of action.
You remember nothing else. Take on those nice round numbers, right? And then, I mean, we're seeing, so the average technical attribute rating of the stocks in the Dow, right? We said only 5 5s, not that many 4s. It's 2.9. So it's not that high. You mentioned that that's higher than it's been throughout a lot of the past year, right? When you've been going through these names. But there are some interesting stocks that might not be 4 or 5 attribute ratings, still could be pretty interesting to look toward moving forward. I know one that I kind of caught my eye off the bat was Cisco, ticker CSCO. It's 3 for 5 attribute rating, moved up from a 2 in July and has sat there since. You're sitting on 2 consecutive buy signals, moved back to that positive trend in July, pulled back pretty notably over the course of the past several weeks, but you haven't even gotten to your first support level down at 46. It's also one of the more oversold names. It's technically in what we would consider washed out territory, down at 78% oversold, and a box above that support level. So if you get a bounce from this washout position up around the $50 mark, $50 to $51 area, it could be another name that could get interesting as we look toward movement into next year.
And what might surprise most folks is, I mean, at this point, has maintained buy signal for most of the year.
Right.
And is one that there's not many claims that stocks within the Dow can make that in terms of they maintained a buy signal for most of the year. I mean, Visa was one we talked about earlier. Cisco, technically, it's maintained that buy signal since February of this year. So even pulling back here, like you said, reversing up there, still a healthy technical picture if we get that reversal and it holds that support.
And it's one of the few names in the tech space that gives you a decent yield. I mean, not as high yields as you can certainly get in the fixed income space now, but you don't see 3% in the tech space all that often.
Yes, and it's sort of interesting. I mean, we definitely still get a lot of calls, I feel like, about people looking for yielding stock names. And as we were having the conversation, you mentioned Cisco. One of the names that sort of surprised me in terms of has maintained a buy signal now, technically for 12 months, is Procter Gamble, PD. Still sitting at a 3 for 5, has maintained a buy signal since December of last year. Has had a lot of back and forth action. To say it would be range bound might be a truer definition of it. You know, between that 158, 142, it's kind of hung in that range. It's been fairly actionable. Yesterday's action kind of brought it into a column of those, put in a lower top there. Maybe
kind of brought it into a column.
Well, it did bring it into a column of those. But then brought that lower top. But still, I mean, it's hard to argue with a 3 for 5 that's maintained a buy signal for most of this year, yielding 2.5%, and you know, maybe some have looked at it as a potential trading name because of that trading range. But overall, as far as a long-term holding,
could be, I mean, you're looking at it, it's still in the top half of that food and beverage set matrix. It's been on buy signal against the market since March of 2020, right? So that long-term positive strength. And like you said, it's just consolidating towards the 50-day moving average, basically. I mean, your 50-day moving average is right there at 148. It's just bouncing back and forth right around that now. Still on a buy signal, still on a positive trend. And hey, if you get a reversal higher, it's now because it reversed down, you're just closer to giving a third consecutive buy signal, right?
Yeah, right. With that potential buy signal being there at 154. So we'll see where it transpires from there. But truthfully, these were probably just a slight more than a handful of the ones that we looked at.
Yeah, we talked about Disney last week on the podcast. One of the stocks we were going through Will and I were trying to get each other to guess names. I think that was the only one that Will got. We were not very good at that. But Disney's another. It's a 2 for 5, not a strong attribute name, but a decent looking like absolute picture. You cover up the name, you look at it, it doesn't look half bad, right? One that you cover up the name, you look at, and you know it looks terrible though, is Walgreens. That was a name I was hoping we could get to last week, but unfortunately there wasn't enough time on it. I mean, you're looking at all the stocks in the Dow on a year-to-date basis, right? You have not that many that are negative. You have some like Chevron that have moved more negative more recently, down 20% year-to-date, and then you got Walgreens. That is down almost 43% on a year-to-date basis after rallying 7% in the past week. So, I mean, this is a pretty weak looking technical picture. I mean, I lose track of the number of consecutive sell signals we've seen there.
Seven at this point, and it almost truly could. There was that near term buy signal in early part of 2022, but really, you could almost call it maintained a sell signal since June of 21. I mean, it had that near-term buy signal, but ultimately we're right back to a sell signal at this point, trading at levels we haven't seen Wow.
You gotta go back
2008,
a ways.
2009.
Yeah.
Actually, potentially even lower than that at this point. Looking at, yeah, currently chart is at 20. That truly puts you at levels in the stock you haven't seen since 1998.
Wow. The all-time chart low was 1994 at $4. So we still got a ways to go if we're going to get down there. But I mean, even with all of that deterioration that we've seen on a year-to-date basis, as well as throughout all of 2022, right? You're not oversold. We're at negative 7% on a weekly overbought or sold basis. It's just sat there in weak field position for a very prolonged period of time. So I know we mentioned names looking for yield. Walgreens does kick off at 9% yield, and it has earnings coming up pretty soon at the beginning, right at the beginning of January there, on January 3rd is at least the expected date that we have listed now. But if you're looking around, I mean, this is certainly could be an area to look elsewhere for yield, maybe.
Correct. Yes. There's a balancing act between, how much price deterioration you're experiencing versus how much that yield is how much yield is coming in.
Right. Right. Yeah.
And it at this point, and probably prior to even this point that we're talking about it was one that we would generally probably look to avoid and continue to avoid at the moment. I mean, it's mostly looked like it's turned in some fashion with its chart turned into a bit of a trading stock.
Yeah, yeah. I mean, it's looking at that has that technically sell rating, but by nature that technical attribute rating 0 for 5. Needless to say, been a 0 for 5 attribute name since August of 2022. So I mean, it's been down in the dumps for a while, and it hasn't shown any indication of wanting to really swing higher. So obviously, all of these names that we're kind of looking at. There's a lot of other names we could probably talk about all 30 if we had time. Maybe try to hit one a minute and have a nice, efficient 30-minute podcast. Maybe we'll save that for another time. But if you want any more kind of further advice on these stocks or any other kind of stocks, definitely be sure to give us a call or reach out to us there at any of the analysts here at Dorsey Wright would be more than happy to help you out in that regard. But David, I think with that, I mean, we can probably call it here for the first, I guess, official recording of a podcast in the month of December, even though we technically launched one last week on December 1st. Not that many more podcasts ready to go. It's hard to believe we're almost at the end of the year.
No, it is hard to believe. I mean, it kind of feels like 2023 just started in some fashion. And
Yeah.
I mean, even to think about talking about 6 months ago, what, it felt like then didn't feel that long.
Yeah, crazy to think about. And we're probably going to be saying the same thing in another 6 months when we look back and start of 2024. But with thanks for tuning in, everybody here this week. David, good to be talking to you here again.
Pleasure as always.
And we look forward to having everybody back with us next week.